A very warm welcome to all of you. I'm Abhijit Roy, co-founder and CEO of GoldenPi, the online platform for used by lakhs of users for their fixed income investments. For our first-time viewers, I always call this out as to what is the purpose of this Industry Speak series. This is the 15th episode, and what we do over here is we invite the behemoths, the rising stars, or the trailblazers from the finance industry. We get into a deep discussion with the top management of the company, try to understand about the vision, the problem statement that they're solving, the struggles, the financials, and in a way, we empower you to know more about the entity, and if there are investment opportunities, you can take your suitable decisions, right? Now, in the previous, multiple webinars that we have done, we have focused a lot on NBFCs. But today is going to be very different. It's a terrific opportunity for us to learn about a full stack financial services company, right? So, ladies and gentlemen, we are talking about literally a household name, Motilal Oswal Financial Services Limited, or MOFSL Group. Now, the company was started literally 4 decades back by two visionary gentlemen, Mr. Motilal Oswal and Mr. Ramdev Agarwal. It's a full stack financial services company, by which I mean you name any financial services discipline in the market: stockbroking, mutual funds, asset management, wealth management, right? Research and analysis, and anything, right? The company is over there being a trailblazer across all these sectors and in a way boosting up the financial market as a whole. More on this with our discussion that we'll have with Mr. Shalibhadra Shah. He is the Chief Financial Officer at Motilal Oswal Financial Services Limited. He joined the company in 2006, and it has been 18 years of association wherein he has contributed significantly to the growth. And Mr. Shah is a CA by qualification. He has had rich experience across multiple financial disciplines from finance, accounting, taxation to compliance. So, Mr. Shah, very warm welcome to you for our discussion today.
Good morning, everyone. Good morning, Abhijit. And good morning, Pranav. Good morning, the entire panel of GoldenPi. Thank you for giving Motilal Oswal and me an opportunity to discuss about our group and our company. And so we are ready for all discussions. Good morning, everyone. Yeah.
It's our pleasure, Mr. Shah, to have you on this discussion and to know more about Motilal Oswal. Along with that, we have Mr. Pranav Inamdar, who is a director of Trust Group. Trust is the lead banker to the NCD IPO issue of Motilal Oswal. We'll know about this great opportunity during this discussion, and we'll discover what are the rates, what are the tenures, right? How cool it is to invest in this upcoming NCD IPO. More on that later. But first, let's get started about knowing about the company. So first question to you, Mr. Shah. To our viewers and for me also, right? I'm overwhelmed with the breadth and depth of Motilal Oswal Financial Services. As a business unit, can you portray a holistic view for us and give us one view as to how we should perceive this mammoth or gigantic entity that we are speaking of today?
Yes. So this company was founded 37 years back by two founders, Mr. Motilal Oswal and Mr. Agarwal, and both were a chartered accountant by qualification and were actually hostel friends. And Motilal Oswal was very fond of doing some business, and Ramdev Agarwal was very fond of doing research, reading a lot of annual reports of companies, and he always used to buy one share of every company just to read their annual reports. In those days, there were a lot of physical annual reports which used to come. So that journey just started off as a small sub-broking unit, where first both of them said that let's understand what equities are. and read all about equities. Let's get knowledge of equities, how market is looking forward. And that's how the entire fulcrum or the backbone of this organization started with knowledge. That's how we call knowledge first in Motilal Oswal, where research was the basic pretext which these two promoters started off. And on the pretext of that, the broking business was seeded or founded in the year 1996 after they came out of the sub-broking unit. So this entire journey actually was broking business till the year 15 years back till 2008-9, where we actually seeded a lot of other businesses. So the group decided that, so while we were very good in our equity research, we were very good in our advising to the customers, but how could we really leverage this strength and create a very strong, even an asset management and a wealth management business for our customers? And then also, how do we use the free cash flows or the balance sheet to create a very strong investment book, because we were fond of equity. So again, our balance sheet is also investing in equities. And then also, how do we really improve the ROE with a strong balance sheet, with creating a good lending book and seeded lending business, including the housing finance. So the journey of the group has been a very well diversified conglomerate financial services house. And all of this is on the strength of equity. So we understand equities well, we analyze equities well, we invest in equities well, we manage equities well. And that's how, and one word, if you have to say, we are very, very strong equity house or a research house on the backing of very good knowledge. Yeah.
So what I, understand from here, this is a very interesting story of, now the market is abuzz the concept of startups, right? This is actually a startup that started in 1987, and over 4 decades, close to 4 decades, 37 years, right?
Yes.
It has, grown into a multi-billion-dollar organization. That's basically what we are learning today, right? I mean, how a startup started from a hostel room with two friends working together, right, and built it into a multi-billion-dollar enterprise, diversified services in the financial services sector.
Yes, that's right. So actually, we were in 2007. That was the year when the company got listed, and that was the time when we actually hit our first $1 billion market capitalization in that year. And at that point of time, as I talked, that broking was looking very, very strong business for us, because that was a inflection point of time when Indian corporate earnings story also started picking up. So of course, there were some of the other middle crises, but I think if you look at a journey of first the journey of how Sensex has behaved, 16% CAGR on the index in last 45 years of Sensex from
Right.
1979 and so far. So that's the journey what index has delivered returns, and that looked a very, very optimistic scenario. Always our co-founder Ramdev Agarwal, who is actually like an investment guru for all, is very fond of equities, and always he talks of the power of compounding. And as you highlighted that, so while market has compounded, and so actually Motilal Oswal has compounded not only its revenue, profitability, balance sheet, net worth, and even the market cap, where now it's close to about a $4 billion market cap company as we stand today in terms of our market value.
Interesting, very interesting. I think that's going to be a very powerful learning for all our viewers and aspiring entrepreneurs and existing entrepreneurs also who are there, who are viewing this live, or people who will be seeing it. It's going to be a great inspirational story to learn from. So now that we
Yes.
know about this bigness conglomerate when it started to where it is today, over $4 billion in market capitalization as a financial services entity. Can you share with us what are the various activities that are done by this group so that we are cognizant of the breadth and depth and breadth of this of MOSFL?
Yes, definitely. So I'll start with our parent company business. So our parent company actually is a broking business. So we are registered with SEBI, and we do broking on BSE, NSE, MCX, and NCDX. So basically, the primary the old business is the broking business, which is also the issuer company of our non-convertible debentures. And the activities that we do is basically, so we have a very large retail broking business. We have almost 42 lakh broking clients. And this is basically the all retail customers where we do brokerage, where do execution of their trade. So the primary model is that we have 2,500 advisors, and these advisors are the touch point for the customers to basically give them the right advice for
Okay.
investing in equities or trading in equities. And basically, by virtue of those advice, clients enter into the trades with us, and we execute the trades for which the company has a very large retail broking business, which is into. Actually, we have various channels to source the customer. So we have a very large franchisee channel to source the customers. So franchisees are like entrepreneurs. They have their own offices, and but we give them our brand name, we train them, we offer our technology support, and we do a revenue sharing with them. And we have this 8,000 franchisees now, which is one of the largest franchisee network that we have created, where basically we offer the advice to their customers, and we execute the trades on the digital platform, on BSE and NSE platforms for all their trades of cash segment, derivative segment, commodity segment, or currency segment. And the company earns basically a commission or a fee-based income on each of these execution of these trades. So that is as far as our retail broking segment is concerned. We also do a distribution of financial products apart from broking. So because not only we advise customers on the investing in equities, but we also advise them on investing in various financial products, which is equity mutual funds, portfolio management, alternative products,
You have a mutual
bonds.
fund of your own as well, right? You have a mutual
Yeah,
fund.
that's
Yeah, yeah.
yes. So that's part of our entire distribution and wealth offerings, because the company has various set of customers. They are retail clients, they are HNI clients, they are ultra HNI clients. To cater to each of these, we have those relevant distribution team, which typically caters to these affluent customers. And also we have the wealth management business, where we cater largely to the HNI and ultra HNI clients. And there we do a lot of distribution of these financial products, including advising on each of these products, setting the right portfolio mix for our customers based on his entire life cycle goals. And that's how we want that the customer should earn a wealth. The basic motto of the company is to create or enable wealth creation for all our customers, including global customers. So that's the basic pretext. So we not only advise the customer that they should not only trade but also invest, and that is the basic fulcrum of creating wealth for all our customers. So the company does a broking and distribution business. It has wealth management business, and then we also have subsidiaries where we basically do asset management business, because so we thought that why don't we also manage the money of our customers, where we actually seeded our asset management company now, which is called Motilal Oswal Asset Management, which has a very large AUM of over 70,000 crores today. This is all equity assets under management that we manage for our customers. Similarly, I spoke about our wealth segment, which is having almost 90,000 crores of assets that we manage for our wealth clients. And we also have alternate segment of business, where we actually invest into private equity, which is unlisted companies, where we seed capitalized growth companies. And basically, just an example, like AU Bank was our first investment in the year 2008, and it created multi-bagger wealth for our investors in that fund. So similarly, we identify such a lot of these growth companies who are going to list over next 3, 5, 7 years. And basically, we provide them the growth capital to grow their stories and become very strong Indian corporate houses in the next journey of their growth. So that is our asset, wealth, and private equity business. And apart from broking business, we also have institution broking business because we have more than 800 institution clients, which are all foreign investors, domestic mutual funds, insurance companies, whom we advise. And we have one of the largest analyst team in India, where we cover more than 300 stocks as coverage on these Indian listed companies. And these companies we advise to our institution clients outside India and India to invest again their money. And again, for that, we earn the brokerage income or the research or the advisory income for the company. So, and the last segment is our lending segment into home finance, which we started off a decade back. That was a new segment to the company. We are doing affordable home loans there, and that is the segment where which is very large opportunity to grow, because in India, the overall housing loan to GDP has been very low, and with the penetration of affordable segment with a ticket size of 10 lakh in tier 2, tier 3 cities, there is a very massive, significant opportunity that the group thought. That's how we seed capitalized the housing loan business, which is now having an almost AUM of about 3,800 crores as of December, right? So that's the last segment of business. And apart from this, whatever we have a very unique model where all of these cash flow that the group generates from our broking business, from our asset and wealth business, or from our lending business, after paying dividends, we also invest this capital into investment book into equities. And again, this is invested into our asset management and our private equity products. So this treasury book is a very unique segment which offers a lot of gives us a lot of capital on the balance sheet. It gives us a lot of liquidity when the need arises to infuse capital in any operating business, and it also earns 18% plus IRR on these investments since last decade, because we are very strong investment team, and that's how we keep on investing our profit or our capital also as investments on our balance sheet, on which we are earning 18% plus returns. So again, it's a very differentiated model for us, and all of these has given very, very strong combination of operating segments to cater to all the customer needs, life cycle needs, I would say, whether from trading or for investing or for distributing products or selling insurance or lending and so on. So that's how we comprise as a group, from where we started. Yeah.
Wow, that's like a phenomenal size of business that you spoke of. So I'll just recap what all I can recollect. One is the stockbroking business, where you have got 42 lakh investors. It is mainly
Yes.
a franchisee model. 8,000 franchisees across the country, through which advice is given and assistance is given to their client base to invest through Motilal Oswal's infrastructure as a stockbroker. Then you have got the wealth management business, which is 90,000 crores. Then you have got the asset management business, managing the assets of HNIs and UHNIs, which is 72,000 crores. Then you have got mutual fund business. And then you have got the private equity, wherein you mentioned you actually invest into startups, if I may say, once again, into promising startups which can give multi-bagger returns. The first investment was into AU Small Finance Bank, right? And lastly, you mentioned about the housing, finance business, which is a steadily growing one for you, and which you forayed in some time back. The latest, entry of yours into one of the financial services verticals. Great, great, great. Good to know about that. Now you spoke about, the business model in brief about various of these entities. But I think it will be interesting to know, as a whole piece, right? How do you look at connecting all these pieces, right? All these multiple business lines, right? And how do you keep managing the books of all these businesses so that all of them are growing, I mean, at a good rate, at least 18% CAGR, as you mentioned, right? With respect to, the index growth. Mr. Shah, your voice is not audible.
Right. Oh, sorry. Yeah. So over the last decade, India has been one of the fastest growing economy, and so with the strong GDP growth, which the government of India has projected over next 25 years of GDP actually growing to over even $30 trillion, we are expecting that the entire savings pool of this country is going to grow very, very large. So over last 25 years, just to give you some perspective that actually the savings pool of India is US $13 trillion. And over next 25 years, this will cross $100 trillion as per the study done by us. So it will be growing 8 times the entire savings pool, which will be almost $100 trillion. So this actually, gives us a very large lifetime opportunity of financial services businesses that we are doing, especially the entire capital market story, which is the broking business and the asset and wealth business, both put together. And over last 4 years, after COVID, that has also been one of the inflection point for the entire industry, where the demat accounts, which were 4 crore demat accounts in March 20, has gone up now to 15 crore demat accounts
Right,
as of March
right,
20. So that entire inflection of demand story, which is actually the funnel to add customers for us,
right.
is something which has worked very well in our set of customers, because what we are focusing is a customer who basically wants to invest his money and wants our advice, and he comes to us. So this entire inflection point of demand story growing to almost 4x times has led to very, very strong growth in the broking volumes. And
But if I may ask, I'll
yeah,
just pause you for a bit over here. If I may ask, this growth has been across, the tiers of cities. It's not just restricted to metros and tier one. It has gone down actually to tier two, tier three, tier four. I don't know what, right? But
yes.
data says even in the remotest of the villages, people have opened demat, right? And they take positions in tradings. Now, for you as a business house, right? Do you look at going beyond this tier one, tier two cities, also down to I would say the townships and the rural areas, or your focus continues to be only on the metros and tier one or maybe tier two cities? How is that position?
Yeah. So we are very well penetrated. So in fact, as you rightly highlighted, that the growth has also coming from tier two and tier three cities, and I would say that more than half of our revenues are actually from tier two, tier three cities.
Oh, wow.
So overall, there has been a very massive expansion of growth come from this. So while there was metro growth, which continues, but the larger growth has actually come from tier two, tier three cities, whether we take broking business, or we take even wealth management, or we take investments in mutual funds, or we even consider the housing business for us. So with this growth opportunity coming from these cities, a lot of demat accounts are actually opened from there. And a lot of platforms, digital platforms,
Hmm.
discount broking houses, which are entirely digital, they created a lot of massive opportunity to add a lot of customers which have come in the market today, right? And
Right.
now with that inflection of customers coming through the demand story, and as markets have done well, as I was talking, the entire history of 45 years or even last 4 years, market has grown at 15% CAGR and is expected to grow. So a lot of customers' wallet pie is also increasing. So the customer who wants research advice again comes to us. We inflect those onboard those customers digitally. We service them through a lot of our digital means. The advice is also post through digital means. So with this COVID, I was highlighting that with this the demand story coming in, plus the entire digital story becoming very, very strong, and
Right.
that has led to massive expansion of volumes in the market, because today we have created also one of the very, very strong app called Rise, basically where we have actually all sort of trading strategies, investments, distribution, everything put
What rice?
together. And, yeah, it's called Rise.
Nice.
And
Nice.
rise. Yes, it has already 1 crore hits, downloads, which has happened from on this. And this entire opportunity, what I was talking as once in lifetime with retail customers coming to market, still India is very, very under penetrated with almost 140 crore plus population. Still only 10% demat accounts have been penetrated, right?
True.
So this
True.
in developed countries, this is almost 30 to 40% penetration.
Correct.
That per se gives us a very massive opportunity first at the industry level,
Got it.
and even for us in this entire growth, we, with our focus on advisory and investing, have and creating a very, very large franchisee model of business has led to even penetrating to almost 2,500 locations in India. So it's basically, as I was talking, that we have 8,000 partners, and these are basically operating into 550 cities and covering almost 98% of the pin codes of India. So that is our size of our reach and the distribution that we have created over so many years. And that is leading to reaping of those benefits where customer gets our right advice, and we are able to actually onboard them, advise them, and invest their money, and he earns the return on that money. That's our entire growth story. And that is how we have grown very well over last few years in our broking segment. And similar opportunity we have seen in our asset management, where in our mutual fund story also, because if you see mutual fund again, the monthly industry SIPs have grown from 8,000 crores to 19,000 crores in last 4 years. So again, that is another very large number of money coming into equity markets through the mutual fund, and
Correct.
where we have a very large platform, which I talked about, that we have equity mutual funds and portfolio management that we manage in our asset management business, where investors can invest in those mutual funds. And these mutual funds are also cross-sold by our broking and wealth platforms again. So it gives a very good group synergy to manufacture the product and also to sell the product. And that is where we are seeing very strong growth in each of our businesses on broking, asset and wealth, as far as this entire growth story is concerned.
Got it. Got it. So, that was a very interesting perspective that you shared, right? And this 15 crore demats only in a population of 140 crore, right? People in the country, right? 10% penetration of demat only, whereas in developed nations, it would be in the range 35 to 40%, right? So,
Yes.
and as we keep growing, I keep harping on this point again and again, as we keep, moving ahead from being a developing to a developed nation, right? We will see the same kind of trajectory going up, more demats being opened, more amount of funds, especially from the retail wallet, which is coming into the market. And what I understand is this is basically one of the key levers or drivers of your entire business, because more retail money comes in into equity investments, into mutual funds, more number of households become richer, they enter into the HNI zone, you are able to serve more number of HNIs. It's a wonderful ecosystem which keeps on developing with that. But then, you hinted on that point, but I would want to double click on that. All this is possible to tap into this huge base while keeping the costs under control only when one is leveraging technology to the maximum, right? And if we see our, counterparts, or other similar entities in the US, or say in Europe, in Germany, they have been able to leverage technology fully. Like, I mean, JP Morgan has deployed, I think, $10 billion to just do a technology rehaul of their entire working systems. And I firmly believe that that's also something which resonates well with you. So I think it'll be interesting for us to know how are you leveraging technology, to capture this big opportunity which is growing by the day.
Certainly. Yes. So I was just talking about that how this demat story played. Now that is certainly on the backbone of the technology, because today even industry today is adding almost 30 to 40 lakh clients monthly. Yeah. And out of that, again, we from our volume market share, we are almost about 8% market share on the platform. And this is entirely now possible because of the very, very strong technology backbone that we have created. Because this is a business which has gone very, very large, massive change of entirely execution coming through the technology. Because earlier were the days where people used to typically call their advisor, broker, and basically place the trades and so on. There was a physical form to sign and basically open an account and so on and so forth. So this entire tech initiative, so we were the first in the industry to work with the regulators, Abhi, to create the account opening in 15 minutes with the Aadhaar-based verification. So we were the first brokers to do that in the industry, and today all of these accounts are opened in just within 15 minutes with the Aadhaar-based mechanism that is created and approved by the regulator. And that's how we've been onboarding. So today, every month, we are adding 50 to 60,000 clients on a monthly basis. That is our current run rate of client addition. And this is across all our 4 channels of business. Because so while we have a franchisee channel, we also have a branch channel. We have a HNI client channel. And we also have an entirely digital channel where the customer comes through the Google leads and so on, right? So, but all of these 4 channels, entirely the acquisition is through the tech. So customer, whether he's a franchisee customer, whether he's a branch customer, whether he's a HNI client, or he comes through Google leads, he basically gets the onboarding in 15 minutes through our app, where through the Aadhaar-based verification comes in. Now, after this onboarding, the entire ecosystem kicks in through digital tech. So basically, the customer gets mapped to an advisor. So again, there is a digital connect where he knows his advisor that gets mapped. He can physically call his advisor, understand initiatives, or other way around, the advisor also pushes all his research advice to the customer through the tech, and whether it is investing in trading in equities, whether it is trading in derivatives. So we have all sort of research which we offer on the tech. We have an option store. Again, we have created on our trading platform because option volumes in India have been growing very large. And we created an option store where customer gets access to various strategies with defined amounts. A customer wants to invest 10,000, customer wants to invest 50,000, customer invest lakh. We have defined strategies for them. We have stop loss also, so that customer trades, but he knows that the max loss that he can incur by chance if he incurs a loss, what it can be. So we have defined all of these through our option store, which is very unique offering for the customers, which has led to a lot of growth in our options market share. So our market share now in F&O is also 8%, and our cash market share also stands at 8%. So we have and all of these with the volume growth, the market share growth also has come to us, and that is on the backbone of a very strong digitization. So I spoke about onboarding, I spoke about the knowledge of the research transfer through our apps. And then again, we're talking of a distribution business. So while I spoke about our wealth management business, we have a distribution AUM of also 25,000 crores along with this broking, where these 4 million customers have been cross-sold a lot of these financial products. So they have been cross-sold mutual funds. So this is like a trail revenue. It is like a recurring revenue for us through distribution, which we have been able to do. And all of these financial products are now on our app. So we have an open architecture on our app where India has 45 mutual fund houses. All of these, a customer can go to our app. He can actually access. He can first do the research of which are the best performing mutual funds. So he can also do it himself if he doesn't want to access an advisor also. So we have created that competitive edge to compete with even discount houses. So while we have a very large advisory backbone, but we have a very strong tech platform also.
Got it.
Where execution, advice, onboarding, and customer service, everything happens through our app. So that's how our entire digital ecosystem has been created.
So basically, the cost of onboarding the customer with tech has gone. It has, it has been 15 minutes
Yes.
of onboarding against keeping physical people to actually collect the documents, do the verification. That's gone. Then the cost of enabling the transaction, right? That is totally digitally. So you build one platform and all your, 40 million, yeah, 40 million customers are able to access that. Along with that, they also have access to the mutual fund pool. They have got access to the option store, right? Everything under one single app. Got it. Got it. Now, this is all at a massive scale that I understand. Now, it would be interesting to know something on the financial metric side also of the organization, right? How large the organization are we speaking of? What's the kind of revenue trend that we have seen, say, for the past 3 years, or any special financial metric also that you would want our viewers to know about? Some interesting points over there.
Yes, definitely. So how what is our strength also? So as a broker, we have one of the strongest balance sheet, or I would say the largest balance sheet amongst the non-bank players. We have bank-based players who have a bank parent, but from a non-bank house, we are the one of the largest balance sheet player, and our basically our last reported net worth as of 31st December stood at actually 7,600 crores of net worth that we reported, which is one of the largest net worth for any such broking house. And that has happened by,
Right.
because our financial metrics over last, if you say my last decadal revenue and profit growth, we have grown at 31% CAGR, which is one of the largest massive
Phenomenal.
growth, I would say. Even looking at last 4 years, it has grown at almost around 37% CAGR in terms of our profit growth. So we've seen very, very strong profit growth. Even our last, I would say, over March 23, first 9 months, if I consider my broking parent company, which is my broking company only, actually, we did one of our highest ever revenues and profit in the first 9 months of our operations. To give some of the numbers on that front,
Right.
so we touched a revenue of 3,000 crores. We crossed revenue of 3,000 crores in the first 9 months of our operations, which is up 54% on a year-on-year basis in terms of our revenue growth. And in terms of profit, our profit was 1,200 crores for the first 9 months, which is actually grown at 200%. So it's a very strong growth in our revenue and profitability on this financial year of first 9 months versus March 23 financial year as well. And even at the group level, the group crossed 5,000 crores of revenue in the first 9 months of its operations, and the profit cross was 2,000 crores, which is again one of the largest ever profit the group has done. There's a massive growth rate of 200% profit. So last whole financial year, we did 888 crores of profit in FY23, and this year in first 9 months we have done 2,000 crores of profitability. So that's what I was talking. That is a massive 200% growth
Massive
in,
growth, yeah.
in the profitability which the group has achieved, including its broking business. Now, this is on the back of two financial metrics. One is what I talk about our operating businesses,
Right.
which is our capital market segment, which is broking, our wealth and asset segment, and then housing. And
Right.
then the second engine is our treasury engine, because treasury is also, we have invested our capital or our profitability into the equity products, and that has given us also very massive profits, because in last 1 year, our investment book has grown very strong, and our IRRs are 18% on that book. So that has also led to a lot of treasury income in our P&L, which is also grown very sharply. And this is a model where we have been investing into long only equities. So there could be volatility here or there. 1 year could be very plus. There could be year where it would be flat. There could be year where this would down. But our growth story has been that we've been able to generate 18% IRR on this book. And that is how, and we also invest our profit again into this book. So once we pay dividends at 30% every year, we invest this profit back into this investment book. So this investment book gets free cash of profits also, which are invested, plus it delivers 18% IRR. So investment book is now almost about 5,000 crores on our balance sheet. Out of this, almost 7,500 crore net worth, 5,000 crore is represented through the investment book into equities. So that gives us a double model of when you have fee-based business to create profit, plus you have a balance sheet also investment book on which you are creating profit, which
How
is
will the
leading.
profit be divided between these two? Like
Yes.
from the, from the services, financial services as a fee-based business, what would be the
Yes.
percentage of profit there versus percentage of profit from the treasury books?
Yeah. So actually, if you look at our entire treasury profits, what has happened? So over in this financial year, our operating profits are out of this 2,000 crore is 900 crores, and treasury profit was 1,100 crores. So it's almost about this year, because markets have grown very sharply. The treasury profits are almost equal to my operating profit, slightly higher than that. In FY23, entirely it was operating profit. So we achieved crossed the operating profit number of FY23 in the first 9 months itself. And plus added to that, we have a 1,100 crore of treasury profit sitting in our P&L. So that's
So
how we.
900 versus 1100. So 2000 crores of profit in the first 9 months of this FY itself.
Yes, that's right. So
Got
that's
it.
one of our largest ever achievement of revenue and profitability.
So
And
that's
we
a
expect this
phenomenal
number.
number. Yeah. Yeah,
Yeah.
that's
Yeah.
phenomenal number. I mean, for the same period last year, it was 800 crores of profit. So for our viewers, let me put the things in perspective, right? So total revenue generated in the first 9 months of this FY itself is 3,000 crores, out of
Yes.
which 1,200 crore,
Sure.
out of which 2,000 crores is the total profit, and
Sorry,
900
just
crores
correct you that. So the 2,000 crore is the group profitability
group
on a
profitability. Yeah,
revenue base of 5,000 crores. Yeah.
got it. Yeah.
Yes.
Yeah, got it. Yeah. And there's a 200%, literally more than 200% growth in the profit levels from the same operating period last year, right? So last year it
Yes.
was 800, this year it is jumped to 2000 crores, right? So very strong investing philosophies, very strong, due diligence on ascertaining which are the sectors where to put in money. So, that's how the group has been performing at a very good rate, right?
Yes.
Now, if I would want to understand about, how are you looking at raising capital for through this NCD IPO? I think a lot of our viewers would be interested to know about this opportunity, right? A financial behemoth, 7,600 crores in net worth, fully profitable at 2,000 crores, just in the first 9 months of operation of this FY, right? Looks like a great investment opportunity, and you are looking to raise capital through the issuance of fresh debentures, which are
Yes.
at 1,000 rupee face value. Minimum investment lot size for investors, retail investors, is 10,000 rupees, right? So how much funds are you looking to raise through this? And if you can tell, like, what will be the utilization of these funds for?
Yes. Sure. So we have proposed an issue of 1,000 crores for the non-convertible debentures, and this basically we are targeting to raise 1,000 crores of issue through various customer subset, whether it is HNI, retail, corporate institutions put together. This money is in our broking business. So this is raised in Motilal Oswal Financial Services. In Motilal Oswal Financial Services, so while we have very strong net worth, which I was talking about, that we have in the parent company standalone, we have 5,100 crore of net worth, and our leverage levels are very, very moderate. We are just 0.9 times levered. So we're not even one time leverage. And this NCD is proposed to be raised for utilization into the working capital of the business. So as I was talking about that we've seen very, very strong growth in the volumes in the market. So while in the first 9 months ending December, Nifty index was up 25%, our volumes were up 100% as a broking house on a year-on-year basis. And that has led to a lot of requirement for raising the money for working capital requirements. So while we have a very strong equity, we thought that we will raise the money now to finance our growing working capital needs. And this is something which is not that there's a 1 year sort of thing. We've seen last 4 years of our growth story where this amount of working capital has been growing continuously, and we have given in the prospectus how our working capital requirement is flowing, and what sort of working capital requirement is till June 24, for which we are planning to raise this money as well. Primarily, our working capital, is comprising of the margins that we put in the exchange as a broker. So
Got it.
because a lot of the clients takes position. So while client brings us his margin, but the margin, even we operate at say 65-70% at the overall broking level. So we need to place our own margins also
Right.
in the house, because the volumes are growing. That will also lead to growth in our own margins. And that is why, while we have put in a very huge network, but at the same time, we want to raise money through a longer tenure also, because primarily the nature of our current borrowings in the business is short term. But we want to raise now long term money, because we are seeing a very long term story of our growth. Sitting on with the growing needs of capital for this
Okay.
business to be put as margin in the exchanges. Yeah.
Okay. I would want to ask the next question to Mr. Pranav Inamdar. Pranav, my question to you is like, as a lead banker for this issue, how are you looking at the positives of this issue? Number one. And number two, if you can throw some color on what are the top rates an investor can expect, what is the tenure, credit rating, and securitization seniority of the issue.
Hi, good morning, everyone. So, Abhijit, as Mr. Shalibhadra was saying, that they have seen a phenomenal growth coming in especially in this last 9 months. Of course, it's all with the backdrop of great amount of digitalization, a lot of ease of trade kind of policy from the government as well as SEBI, ease of
Correct.
payment policies. So all that has really helped in expanding the investor base. So that's when we got together and sat down on the drawing board and realized that Motilal Oswal has been raising funds through CP route and mostly to the institutional side. Now it's the right time to bring this story to the outside world.
Right.
Okay. And that's why I go public. Now in public, if you see, Abhijit, there is not too... Though there may be a lot of options to invest in especially in the fixed income side, but a good quality asset is not very easily available.
Absolutely.
And at
Absolutely.
rate.
Yeah.
Yeah. So, and people, especially the senior citizens, insurance companies or a provident fund or a corporate, they might want to look at something long term, because now if you see, there is a lot of volatility in the interest rate. So people would like to lock their returns for a longer period of time.
Yeah.
So keeping all these things in mind, we came up with the idea of coming up with a 2 and 3 year have traditionally been soft spots for retail, HNI, corporates, etc.
Right.
So, and to broad base the investor base also, we thought of coming up with 2, 3, 5, and 10, with coupons ranging from 895 to 970. Now, for a 10-year 970, it's a fantastic rate. People wanting a shorter maturity can go for 5 years, where the coupon will be 935. So, I mean, the trade-off is very, very good. And with a very, very creditable rating of AA. See, in AA, a lot of players in the market would have, like, suppose a small corporate or a SME or an institute or a university, they may have policies of investing AA and above. Even for a retail investor like me and others, we would have that, that AA gives us a fair amount of cushion that, that I'm investing in a good quality company, and with such strong financials, it's definitely a good bet. And of course, it's a secured debenture. So there is no question of, investing in something which is unsecured. And again, if you see, because it's an IPO, the minimum investment size is 10,000 rupees. Means the face value is 1,000 per bond. and minimum is 10 bonds, and then you can invest even in one bond. I mean, multiple of one bonds. So 11,000, 12,000, it can
Right.
go. So that will create a huge dedicated loyal investor base for the company as well as for the investor. It's a fantastic return, because if you go to buy any other thing, the lot sizes, etc., a big issue. Secondly, with SEBI coming out with UPI payment mechanism,
Right.
you can make UPI payment up to 2 lakh rupees, and just not go through the bank or your broker or anything. You can just go to any website of Motilal or lead managers like us or GoldenPi, just apply online, and that's it. All bidding, everything is automatic and done, and you get your bid submission, you get all proof and documentary evidences, and it's safe, and you get your allotment on time. So this, all this thing has really, and all this is done in 4 days. I mean, what better cushion can an investor have than this?
Correct. Post closure of the issue, within 4 days, all this is closed.
4 days is allotment. Yeah. And in another 2 days, it's listing. So, and they are all they are listed on BSE and NSE. So
Correct.
it gives ample liquidity. Anytime you want to exit, there will be a price available on the exchange, and you can exit on that.
Right, right. So, thanks, Pranav, for the great perspective. For our viewers over here, the details of this NCD issue is 1,000 crores being raised, 500 crores in base issue, and 500 additional in the green shoe option. And the tenures are very simple. You can invest in either 2 years or 3 years or 5 years or long term 10 years. Right now, on 2 years, you would get 8.95% as your coupon payment. And for the highest tenure of 10 years, you will get 9.35%. Now, the point to note over here is this is a AA rated financial entity, very large in size, 7,600 crores in net worth, 2,000 crores in profit itself in the first 9 months, right? And the point to note over here is, such a strong entity is offering a 9.35% on 10 years. My math would work out in this way, that we spoke about India going from being a developing to a developed nation. One of the key factors of a developed nation is the rate of interest on bank deposits is going to come down, because the cost of capital for the industry has to go down. That's how capital becomes available to companies and they're able to grow, right? Which means our bank deposit rates are going to go down even lower than this 6.7, 6.8 level that we are seeing. 10 years down the line, my bet is it'll be at 2.5% level. At that point of time, if I'm getting 9.35%, the math seems to be very favorably skewed towards investing in an NCD of 10-year tenure versus a bank deposit. But that's my personal take. That's how I take as an equation. Over to completely the retail investors to judge. One point I'll put over here, it's one small point, like Pranav mentioned, investing in this for retail investors is possible through the UPI route, right? That's what the government has enabled. And we use UPI for anything from buying our vegetables to, to buying grocery items to everything. Now you can invest seamlessly using your UPI. And well, the limit has now been increased to 10 lakhs actually, right? You can apply every application max up to 5 lakhs. So you can do 2 set of applications, right? Which can go through your UPI route, and up to 10 lakh is the retail allotment size, right? So it opens up on 23rd, which is next Tuesday, 23rd of April, 2024. Pre-booking is open. You can look at GoldenPi, and avail the pre-booking opportunity that's over there. Now coming back to the company, last few questions to Mr. Shah. So how do you look at the future of the company? Two things. What would be very interested about? One, what new products or business lines you are going to add to your financial stack? And number two, what are the great investing or emerging opportunities that you're seeing in India on which you would want to latch on to scale up your businesses?
Yeah. So good question. And I think it's basically, so how we see is we classify things into 3 parts. One is the trend. One is the endowment, means what sort of strength that we have. And one is the moves that we are making as a group, right? So actually, I would say, see, from a future perspective, we should look at these 3 parameters. So trend, if we look at it, I think it's a very strong trend that we discuss about the entire ecosystem of investing and capital market services, right? Whether it is through demat accounts, through mutual fund SIPs, through lending, through home loans, through various investment products, insurance, etc., to distribute. So the trends have been very, very strong from a financial services perspective. So while I spoke about the India GDP trend, I spoke about the savings pool, and then comes the Indian corporate growth story. All of these trends are very, very strong, with India ranking improving and the government clearly portraying a 25-year agenda to put out in terms of the GDP growth, how they are looking at. And in this entire capital market and the asset wealth ecosystem, the trend has been pretty strong over last decade, and we expect that this is going to be a massive opportunity again for us in this business. And we have a very strong, and coming to actually the endowments. So we have a very, very strong brand called Motilal Oswal. So this 37-year-old brand. We have one of the strongest balance sheet to cater to this set of business, including lending, etc., and investing. We have one of the strongest risk management ability with the strong balance sheet, and our promoters very strong experience and the entrepreneurship mindset that we carry. And then again, with this thing, we are having very accretion of our market share in each of our businesses in the competition also. So this is what is the endowment that we have with us, and the moves that we are making now, actually. So in each of the businesses, so we are deepening the moats. So while we have 7 businesses and treasury, which I spoke about, into 4 segments. So
Right.
we have ample opportunity to actually deepen the moats in this business. So at this juncture, we are not planning any new business to be set up. But yes, from a product perspective, we have been innovating a lot of things. So
Right.
while we spoke about broking business, distribution business, asset management, now in each of these businesses, there are ample products which we can even manufacture, and that's what we've been doing. So we started with mutual funds and PM. So first, in fact, we started with PMS, then we were with mutual funds. Then we started with alternative funds. So alternative funds is a very upcoming space in terms
Right.
of the products, where we have got into private equity funds, we have real estate funds, we have a lot of products that we are actually manufacturing with jointly with our asset and wealth business also, which will be fund of fund structures. We created a lot of passive funds also, because today India is also moving towards a passive story, which are called index funds or ETFs. Because in developed countries, 70% of the money is also invested in through the passive fund. So we are very, very innovatively, we have launched a lot of passive products, both on domestic and offshore side. So we have been creating a lot of newer products on each of our existing segments of business to deepen our moats, improve our market share, improve our client base and distribution. And with the help of this entire ecosystem, we expect our growth rate to be 15 to 20% to maintain very continuously over even next decade of our growth. That's what we've been guiding our investors. That's how we should look at our growth as well. So I think future looks equally exciting, I can say, as past. So while it could
You're
be
not
more also, but
complacent. You are
I'm
not
putting
at
it
all
that it's
complacent
really
with
exciting.
already the success.
Yeah. And our positioning has been very, very strong in each of the business which I spoke about. Yeah.
Thank you. Thank you, Mr.
And then coupled with this last point, the entire digital ecosystem, because the entire backbone of this has been our tech team, and each of the business, we have the tech platforms, which is very of a very strong caliber, which I would say, and very competitive edge that we have built in these businesses. And with this tech, I think the growth can be actually multifold and infinite, as the India entire financial service story has been playing out. Yeah.
True. I think that was a wonderful discussion that we had, and thank you, Mr. Shah, for sharing great insights about the company right from the point, a startup started right from the hostel dorm room till today, 40 years down, literally into a $4 billion financial conglomerate. It's a fantastic story for anyone to hear and be inspired about, right? We wish that more such enterprises start in the country and we are able to, transition to the a developed nation soon, right? With inspiration from institutions like Motilal Oswal. I think now we'll take a few questions. There are a lot of questions which has come in, but I'll just pick and choose a few of those ones which I think will be of interest for the viewers. Rest all to our viewers will answer back to you over email, right? And if you have got further questions, please write to us. We'll share it with Motilal Oswal team and we'll get the answers. I think one question is there an extra interest for senior citizen on this NCD issue?
Yeah. So there is, yeah, Pranav can address. Yeah.
So,
Yeah, Pranav.
the structure we have designed is in such a way that normally there are four category of investors, which is the QIB, which is category 1, corporate, which is category 2, HNI, which is investors more than 10 lakh of investment, is category 3, and retail, which is investment up to 10 lakhs by individuals and HUFs. Okay,
Right.
so we have done the reservation of the issue in such a way that we have assigned more percentage allocation to the retail and HNI. So it is like a 10, 10 and 40% for HNI and 40% for retail.
Okay. So that's
So
a
we have
huge
kept,
amount of money
yeah,
where retail can actually, more number of retail participants have got the bandwidth to apply. Normally
yeah,
in issuance, we see
yes,
20-25% of the whole amount allocated for retail, which is
yes.
slim, as I would say, from my experience. It should be increased. It's very heartening to see that, Motilal Oswal has taken this opportunity to open up the doors for retail investors.
Yeah, so then
What?
there is no reservation or kind of an additional incentive for senior citizens or employees or any other existing shareholders kind of a thing.
Okay, okay, understood. Let me take one more question, which says that this has already been answered. Nonetheless, I'll ask, can you elaborate on the issue structure and way to apply? I will take that question. I mean, from the discussion that we had, this is a 1,000 crore issue, 500 crore base size, 500 crores is the green shoe option. You can apply as retail investor from 10,000 and then 1,000 rupee after that, right? So 11,000, 12,000, 14,000. It's completely up to you. You can apply fully digitally through the UPI route. The structure is you can invest in 2 years, 3 years, 5, 10 years. 2 years will give you 8.95%. 10 years will give you 9.35%, and there are interim rates in between for the 3 years and 5 years, right? For the details, you can look at the information memorandum or you can, look at GoldenPi site where the pre-booking is open. The issue opens on 23rd of April 2024, right? And understandably, my take is that given that this is a very attractive opportunity, very profitable company, big legacy of doing massive amount of financial work, right? One of the biggest financial entities in the country right now, this would be an opportunity up for grabs. So I mean, it would always make sense to, apply first because it's a first come, first serve basis, right? Once the issue closes, it can close. My thought is that probably it'll close way before its formal closing time because we'll see huge participation. So it'll make sense for anybody to apply as soon as they get the opportunity, not to wait, till the last day.
Yeah, so
So
the issue officially closes on 7th of May, but we have an option to close the issue early with 1 day notice,
right.
provided we are satisfied with the fund that we have received.
Correct, correct. Yeah. So I think we had this great opportunity to learn about a fantastic story, startup story, hostel dorm room, ideal startup story till $4 billion conglomerate, right? Spread across financial verticals and still grounded, still hungry. It's still day one for this company, right? So
Yeah.
fantastic.
Abhijit,
Thank you, Mr.
don't forget, Abhijit, they started with one share in each company. So they started retail.
They started
So they
retail.
can understand
Full
what's
retail
retail.
focus. Yeah, totally.
And
Totally.
coupon, we need to specify one more time that it is 8.85% for
8.8.
to 9.7 for 10 years. So there are various coupon options, which monthly and cumulative options and annual options.
Got it. Got it. Yeah. Fantastic. Thank you, Mr. Shah. Thank you, Pranav. Thank you so much for sharing great insights about the company and giving our viewers the opportunity to know about this enterprise and also avail this great investment opportunity. So, all the best for your NCD IPO issue and may you have success. Yeah.
Thank you
Thank you
so
so
much,
much.
Abhijit. It was
Thank you,
very
gentlemen.
nice interacting with the entire team and GoldenPi. Still, if there are any further queries, please do get in touch with me or Pranav and or GoldenPi. We'll be always there to guide and clear the doubts. Yeah.
Sure, sure. Thank you so much.
Thank you. Need to see a good participation coming up, huh, Abhijit?
Yes, yes. I'm sure, retail investors would be super delighted to have this opportunity, right? These are new
Definitely.
opportunities which are opening up in New India. So it's, we are on the right track. Thank
Thank
you.
you.
Thank you.